This Forex class is going to go over two different topics. One of them is how to use multiple time frames when trading, and the second one is how to use trend lines to spot counter trend trades. So using multiple time frames to trade vastly improves your odds. First of all, we got, for example, a 5-minute chart on top, a daily chart on the bottom, and then an hourly chart. And the nice thing about having all these time frames up is that you can draw trend lines, Fibonacci areas on some of the longer term charts. For instance, right here you have a trend line coming over here where it got hit 1 time, 2 times, almost 3 times. This is the 3rd time, 4 times. And when this trend line was broken, you oftentimes can get some big moves. Looking at the daily chart, you can clearly see over the last few months the euro dollar is down. You draw your fibs on here. You can get a feel for, there's some major resistance at 33.49. If it shot above that, 3,500, the whole number, up to 35.81 is likely to be, in the area where the market's either going to go sideways or pull back a little bit. But over the last few weeks, you can see that the euro dollar has been going up. And so today, when it came down to the lower containment bands, and especially when you get a double bottom like this, you can more comfortably take a buy when you get a double bottom at the lower containment band, one of the Fibonacci profit target levels that I do each night. And it's underneath the 2.0 white containment band, which oftentimes is the end of the move. And so you can see the trend, reversed pretty violently up. It went up 110 pips. You can see also on the 60-minute chart right here, and this is the component of class that I'm calling a trend line counter trend breakout. You can see that on the 9 o'clock bar right here, this bar is 9. These are hourly charts. Right after 9, the price broke out of that trend line, which would have been somewhere in this area right here. So by having multiple time frames up and drawing your fibs and also your trend lines on here, you can spot major trend line breaks. And you can also see that not only was it a double bottom today, but it was a double bottom from a few days ago that you might not see if you only had a 5-minute chart up, if you only had a range chart up, or if you had a tick chart up, you'd see even less. So it's really excellent to spot those reversals. You can also see from a previous wave down, pretty much, Fibonacci areas right there off of this last wave. It's also a double bottom here. It's at the lower containment band. There's a lot of reasons to be bottom fishing down there. And so if you're afraid or more conservative trader and you didn't take this trade down here, once you spotted it breaking that trend line right here, which would have broken right at the end of the 9 o'clock bar, which is at 10 o'clock right here, you would have known that a major trend line was broken, and you might have bought this little pullback right here. Here's the previous day's low, the dotted red line, and the fact that it broke a trend line, broke back above the previous day's high, you can see that on the way up there it had pretty decent strength. There's only one bar right here of weakness, and then this next bar went green, and so when it breaks out right here, pretty high probability trade, and most of the time it's going to go to the fib targets of that wave. So you have either 3104 to 3117 as your profit target, and it overshot it by about 10 pips. But even if you got out of the whole trade at 3117, you're in this trade around, let's just round up to 70, you made 47 pips on that trade. So by seeing the multiple time frames, it really increased your odds of taking this trade at the double bottom. Or if you didn't, again, if you didn't buy it down here for whatever reason, when you saw that it broke the trend line, you would have bought this next little pullback and cut, the majority of that move. Let's link the charts together so that when we change one of them, they'll all change, and we'll look at some other currency examples. When you select all the charts with the same color, if you type in, let's say pound dollar, they will all switch at the same time. So let's look at this one. You can see this also formed a double bottom quite a while ago and rallied up. If you can hit the plus and minus key to zoom in and out. This is a very explosive trend. It's nowhere near the fib retracement level of the whole move. But one thing that you can see on the hourly chart is, again, Control L brings up the regular line tool, Control R for the ray. you can see, and I try to make sure they touch as many spots as possible. Drawing trend lines, fibs, and drawing tools are kind of a art. There's no perfect way of doing it, but you can see this one also broke at the 9 o'clock bar. And the times of any of these bars, like this one, 8 o'clock, 9 o'clock, is the beginning of the time frame. So if you see a 9 o'clock bar, it means this bar closed at 10. So looking at this chart, also you can see this one much stronger, longer term trend than the euro dollar had. It broke out above that trend line, came up to the hourly moving average, broke out right here, and you might have had a small 5 or 6 pip win. You bought that next little pullback, and the second one was the one that really panned out. Again, the 1.618 usually is the end of the move. If you got this trade right here at 20 or 58.27, you would have been in it right here. So you made about 37 pips on that trade. Again, by using multiple time frames, it really helps. Let's look at some other examples here. We'll see if we can spot any other time frame trends. This one's coming down to the 200-day moving average on the daily chart, which can help you possibly spot some trades. It also, if you draw your fibs on this last wave down, it went up today to the 62% retracement. If you, for whatever reason, didn't want to get short at the 50 or 62% retracement, when it breaks this trend line here, you might at that point, decide to do it. And a lot of people don't know whether to draw trend lines underneath the wicks. I try to, whenever possible, get into trades earlier. I'd much rather have a few extra losing trades and get into a winning trade 6 to 15 pips better price. Because a lot of times the momentum's going your way when a trend line gets broken, and you can move your stop to break even once it moves 8 to 12 pips your way. So I personally prefer to take more trades, have more losses, much more break evens, but by getting in early, I can also scale out, or if the trade's not working, sometimes get out with 3 or 4 pip win versus a loss. But this one also broke down. It also went up to the 61.8% fib. You can see the daily, weekly, monthly trend is down, and usually at the upper containment bands, price runs out of steam, and when the longer term trend is down, you can look for sells up there. So you got the counter trend signal here. It went down about 15 pips. If you shorted again here, you probably maybe lost 5 pips, and then you shorted again here when it started to come back down, and easily picked up 10 or 15 pips. And a lot of times when you know that there's a major resistance area and it's not likely to go above it, not only can you sell the highs, but when you see a 1, 2, 3 pattern like this, you can also sell it. This market was topped out, and you can see on the way up right here, it had less upwards momentum than it had earlier today. And so when it went sideways right here for about 30 minutes and broke down, great place to go short. You already know ahead of time where your profit target is. It's either the fib target or it's the hourly moving average. Usually the hourly moving average finds some support. There's some buying here. It's at 56. The fib level's at 50. So if I was short here somewhere around 71, I would have just got out of half my trade here, moved my stop down, and when it hit this fib target here and the momentum fell off a cliff, I would have got out of the second half somewhere down here at 52. So don't be greedy when you're taking trades. But by using multiple time frames, not only do you have the 62% retracement to sell at the top, but you also have trend line breaks. So there's a lot of trades that you'll find. Remember, the euro-dollar trade also had a double bottom today, as well as today's low on the hourly chart was the same as a previous period. And the previous period, it came down to that price and then immediately reversed back up and violently reversed up about 150 pips. So, seeing how a previous low reacts at a price can improve your odds today. It came down to that area twice. If there was going to be sellers, it would have went through it, but there wasn't. There was major buyers there before, and there was again today. Let's look at the euro-yen. We might have the same pattern on this. Now, by looking at the daily chart, you can see this is stuck between many major moving averages. You got a 50-day moving average in yellow, 20-day moving average in the thick white. It's stuck in between there. So it's You also, by looking at multiple time frames, you know when a trade's not very likely to be one that's going to move a lot of pips. But again, on the hourly chart, you also have a nice little trend line break right here. It touched, pretty much touched again and broke, and then the next hour it violently broke out. This one's right here is at 10. So at 11, after the 10 o'clock bar is over, here's 11 o'clock on the chart. Price, had been going down with a lot of weakness, had weakness again here, and then it rallied up, and you kind of have a 1, 2, 3 low. It made a higher high, and to me, a 1, 2, 3 low, it doesn't pull back more than a 62% retracement. In this case, it didn't even go to the 50, which most of the 1, 2, 3 low or high patterns you spot pull back 50%. Some of them pull back 62%. So this was very strong for only pulling back 38%. You already have your fibs on there. Here's your first profit target. Here's your second. You buy when it starts going back up here at 16. You can see the momentum on the way up had a lot of extreme strength. The pullback had about 40% less momentum than the up move had. And so it goes up with a lot of momentum. And again, 1.618 is usually the maximum profit. You might get out there, let's say at 49. Let's just round up. You're in this trade at 20. You almost made 30 pips. Very high probability trade based on using a trend line break here. And you don't expect it to go above the 50-day moving average, which is up there. And so, you're not continuing to buy this. By having the multiple time frames up in the daily, you can avoid the pitfalls of trying to continue to trade with a momentum move. Your best bet is because it went up here before and it's been sitting in there for about 4 or 5 days, wait for price to break out above there, and then there's, the next major moving average is hundreds of pips away. So again, the advantages of using multiple time frames are you can spot trades that you wouldn't normally take. It will help you avoid trades like today. This was a good trade because the market wasn't at the 50-day moving average, but once it rallied up there, and you can see it's right underneath that area, you don't want to keep buying this because it's been 4 or 5 days. Price couldn't go above it and stay above it. So you can avoid losing trades by looking at multiple time frames.